This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks here from Stockbox with Alan Green at the end of a week where we were in London, of course, at the Resourcing Tomorrow show. And Alan, of course, we were there in person together. I know you hosted some of the Cornish Pavilion interviews there. But, I mean, the show, I think, this year, from my point of view, was busier than last year. I think there was a bit more of a buzz because I definitely got the sense last year. I was doing my review yesterday, my sort of like little piece to camera, and I thought I'm going to say the same thing as last year, which is not great, where I said that there's money there for good projects, but it's holding back. But I thought, actually, I get the sense this year that there is money there still, and it's holding back a bit less than it was last year. So it's, things have improved. And talking to different people there, I generally get the sense that it's been a tough year, but there are green shoots. I got that theme quite a lot, actually, green shoots. But what was your take from being there?
Very, very similar. Well, I think on the first day, there didn't seem to be initially quite so many people around, but I think as the day wore on, the number of people there increased quite substantially in volume. But certainly, the interviews that I did for Stockbox, going around and talking with various directors, that particularly on that Cornish Pavilion, which I thought was very good, and there was a real sense of cohesion there because, of course, you've got all these companies working away on a limb, metaphorically and literally, down in Cornwall, but they're all kind of working together and supporting each other. And there are a lot of private companies down there, limited companies that, of course, don't have the pressures of having to keep the share price elevated, and they're successfully raising money. So, of course, every week we talk, we're talking about the state of the markets and how difficult it is and how share prices don't reflect the actual valuation. And we're going to be seeing more of that in the companies I'm going to be covering shortly. But I think it's incumbent on this current government to actually do something about the markets and put some sort of incentive, whether it's removing stamp duty from share purchases, whatever. Put some sort of incentive and driver behind the markets to get things going, because they're simply not working at the moment. It's a problem, I know, in other markets as well, but it seems to be particularly prevalent here in the UK right now. So.
Yeah. Well, I was talking to different companies. I mean, like Peak Nickel, for example, stood out to me. First time I was speaking to them. So a project in Scotland, I was really getting a nice feel, particularly with the Cornish Pavilion there. There were 6 companies there. Some are listed, some are private, as you said. And then you've got Peak Nickel, who are up in Scotland. And of course, I spoke to Baroness Northover, who was doing a panel on, how can the UK be perhaps a centre of it was how the UK can secure its critical supply chains. And then also Tom Attenborough from the London Stock Exchange was on a panel. I interviewed him about how London could perhaps become a centre of mining finance. And I just thought, maybe it's a different sense I'm getting this year, that maybe it's starting to finally come round. We've talked about the green transition for a while and these commodities, but uranium was the talk of the town last year, and that price stabilised and has basically been staying pretty much where it is for the whole year, which is great. It's maybe a new bottom in uranium pricing there. But I definitely got the sense that not only could London perhaps reinvigorate itself, but I also got the sense that the governments are finally taking it seriously and there is action being taken. And then when you see companies there at the show who are actually homegrown British mining companies, that really makes you feel quite good, because we don't have that really. We're not Australia, we're not North America. We don't have access to seeing a lot of these mines, but there are some still good projects here in the UK. So I was really pleased to sort of get that vibe. And with Peak Nickel, like what you say, they're holding back on their IPO, if you like, until they're in a much stronger position, doing some more drilling, raising private finance to do some drilling, to get a resource out there, even maybe start some of the early studies before they then go to market with a much stronger position. Because at the minute, the market has been really punishing companies, even who've got good news. So, yeah, obviously we'll have to wait and see what 2025 brings, but I did get the sense that things were better than last year. I honestly can say I think things were better than last year. And the other thing, I don't know if you noticed, Alan, but I saw so many Saudis there this year, and I know the Future Minerals Forum were there last year and this year, but there was a lot more Saudis than I've ever seen before. And I think Saudi, they've come so far in just a few years there. Maybe that's going to be the centre for mining finance. I don't know, but there's a lot of money coming out of that region, and there was some high level meetings going on up there. So yeah, bullish for the sector in general. But how much more of do we have to wait in the lower end? Well, yeah, if I knew that, I wouldn't be talking to you. But
Exactly, exactly. Well, the thing is, it's going to happen at some point. There'll be an upswing at some point. It'll happen when we least expect it, and it'll probably take us all by surprise. But yeah, the Saudis were very prevalent at the show, and very very visible. Of course, we spoke recently about Power Metals and their Saudi venture, and a lot of companies are getting involved with the Saudis. But also, I said earlier, the government have got to get behind British companies and the markets to drive it. And certainly, speaking to some of the Cornish companies, that the MPs are working really hard with them. And you've got now Baroness Northover, of course, who you interviewed. That was a great interview, by the way. Who is heading up, or she's vice chair of the UK Parliamentary Critical Minerals Committee. And I think these people are going to really get behind British companies. And of course, last week we spoke about Anglesey Mining.
mm,
The Paris Mountain project in Anglesey, same sort of story there, and I think if that project gets to the upgraded PFS, or that it completes the upgraded PFS we discussed, then that's going to be transformational for Anglesey as well. And this is what we need to see. So Peak, as you said, Peak Nickel up in Scotland. There are various other companies dotted around the UK, but the UK mining industry, I think, looks set for something of a renaissance in the coming years. And let's hope the government gets behind and really puts drivers behind both the AIM market and the Aquis market, and of course the junior market, to really get the share prices moving again.
indeed, indeed. Let's hope so. So today we're going to cover Cadence Minerals and European green transition as well, Alan. So are you taking Cadence first?
We'll start with Cadence. Yes,
Sure.
yeah. Thanks. So, of course, Cadence Minerals, AIM-listed company, has a number of assets as part of its portfolio. And I've said on many occasions this company is ludicrously undervalued, but it's just one of many. But I think in particular, Cadence currently trades at 2.6p with a market cap of 5.9 million, just under 6 million. And why is that ludicrous? Well, it has a portfolio of assets. The primary asset is, of course, the Amapa iron ore project in Brazil, and the company's owned this for 6 to 7 years, and it has bought this asset, which is it was a former working iron ore mine in Amapa that was originally owned by Anglo American, then sold to Clough's. Anglo American valued the mine and the assets at about $600 million on their books in 2012. Since then, there's been a resource upgrade and infrastructure investment. Cadence owns 34.6% of the project, and it's got the first right of refusal to go up to 49%. So that's a project where the net present value of the asset has just increased to 1.97 billion. That's nearly doubled in value, which is a huge step forward. In addition, the geological team and the engineers there have been working on a DR grade, a direct reduction grade flow sheet to produce green or green iron, green steel. And this is going to be key for the future of the steel industry, because green steel, of course, is in line with sustainability and clean energy resources going forward. It's going to be key to a key factor in the choice for steel makers going forward. And Amapa is set up with this with this new engineering flow scheme in place. The project's estimated to generate a total of $9 billion in gross revenues, 4.9 billion in net operating profit, and $4.6 billion in free cash flow over its 15-year mine life, which is it's hugely significant. not only that, the 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 asset also is adjacent to a number of other iron ore deposits. So the current JORC mineral resource estimate is for 276 million tons at 38% Fe. That's of course iron, and the entire asset is now de-risked it's a de-risked brownfield asset, and of course that includes the railway line over which there's an operating license to 2036, and that line runs directly from the existing mine infrastructure all the way through to the port at Santana, which is owned by the local operating company Dev Mineração, where of course the iron ore is shipped from. That also included when the asset was acquired, it included stockpiles of iron ore pellets, which were then shipped to market and raised cash to come back into the asset and the business. But it's the permit or the permitting process is on track, and we're moving to a point where it's fully expected that the asset will be coming on stream in a couple of years. We'll start to process again, and we'll process this direct grade or DR grade steel or green steel going forward. So once it's at this point, of course, then the valuation is going to be huge. Cadence, of course, are a mining investment company. Whether they will divest some of their investment or realize some of the profit at that point, it isn't yet clear. Either way, it is hugely undervalued, and I say undervalued because the Edison Research have published several investment notes on the company and on the asset. Now, the last one was early this year from Edison, and this was long before the net present value upgrade. So the net present value at that point was just below a billion. Of course, that was 1.97 billion. And at that point, Edison said, "We have reduced our valuation slightly, quote unquote, to 27.6p per share from 29.5p per share. Our valuation of the Amapa stake is unchanged at 23.9 pence." Now, Cadence is currently trading at 2.4p. So there's a massive disconnect in value there, which has yet to be addressed. So the net present value is now 1.97 billion. At some point, as we near production, this valuation gap will close. But I know we've seen this with other companies, but I do think the valuation gap with Cadence and Amapa is in excess of anything else that I'm currently aware of out there. And that's just Amapa. In addition to Amapa, of course, Cadence has a number of lithium investments. The company owns a stake in the Evergreen Lithium Bino Lithium project that owns 8.7% of equity in the company. That's an ASX listed company, and of course it's subject to operational performance being successful from Evergreen. Cadence will also receive further payment of stock from Evergreen to the tune of 3.4 million Australian dollars. So there's additional value in that stake. The company also has a 30% stake on part of the Sonora lithium project in Mexico, and of course this was recently bought up by Ganfeng. The joint venture partner is Ganfeng, which is the third largest lithium compound producer in the world. There is an issue with the Mexican government where Cadence is consulting and negotiating with the government under the UK BIT or the Bilateral Investment Treaty, and Cadence has alleged that Mexico has breached its obligations, and of course this will be addressed at some point in the future. So there is value in the Sonora lithium asset, but as of yet, of course, Cadence is unable to extract that value. And then, of course, the company has a small stake in European Metals Holdings, 0.2% of equity in EMH, which owns the largest hard rock lithium resource in Europe, which is the Sinovac lithium asset, and of course that is a listed company in the UK, so that equity is easily accessible. So as a company, the assets the company owns and the stake, particularly in Amapa, there is no reflection of the underlying value in the assets in the current listed price. At some stage that will close, but of course, as we discussed just now, Mark, the markets simply aren't working. If the UK government gets behind the AIM market and starts to drive investment and provides incentives for people to invest into stocks, then I think we'll see this change very rapidly. But certainly Cadence at the moment, I think, offers a fantastic investment opportunity, particularly on completion of the PFS as we then move to DFS and the reopening of the Amapa mine.
So as I remember, Alan, the PFS was due before year end, but it's been done, hasn't it? It was completed in November. Is that right?
Yeah, that's right. The PFS was completed or updated, in fact, on the 26th of November. But today's or this announcement is a further upgrade to that PFS. So that's now completed. And then, of course, we have the permits, the completion of the permitting, or the issue of the permits, and then, of course, next year it's that run into DFS, and then, of course, completion and getting Amapa back into production. A really exciting juncture for the company.
Yeah, and that work should start throughout the course of next year.
Yes, that's right.
Yeah, that's right.
That's
yeah, good. Yeah. I'm remembering now. Yeah, 2025, good year, hopefully, for Cadence.
Yes.
Okay.
Yeah.
Fantastic. Thank you, Alan. So let's move on to talk about European green transition.
So European green transition came to market. It raised that they initially raised 6.45 million at 10p. This was the company was launched, of course, by Carl Friel, who is an Irish entrepreneur. He's behind, of course, Amrit Pharmaceuticals, that was built up and sold off, raised an awful lot of money. Then, of course, Carl launched Open Orphan, which later became HVivo, which is trading very successfully. He was behind Poolbeg Pharmaceuticals, still on the board there. But Carl has experience in mining too, and he was behind the launch of European Green Transition. The chief executive, of course, Aidan Lavelle, is a geologist, along with Jack Kelly, the finance director, who I actually met and spoke with at the Resourcing Tomorrow show, or Minds and Money show. And European Green Transition are building a portfolio of green economy assets in Europe, capitalizing on the green energy transition, and of course, largely driven by the European Critical Raw Minerals Act to ensure a sustainable supply of critical minerals within Europe. And the objective, I think, is to have 10% of critical minerals supplied from Europe by the end of this decade. So a real key driver there for the company. So currently the company has a number of holdings. It owns the Ulsrum Rare Earth project. This is in Sweden. It also has the Bajala Copper and Graphite project in northern Sweden. It has the Limni Copper Tailings project in Cyprus, the Alton Farm carbon credit project in Ireland, and also a critical minerals project in Saxony in central Germany. So the focus really throughout 2024, though, has been both on the Cyprus Copper Tailings project, that's the Limni project, and also the Ulsrum Rare Earths project. And in July, of course, we heard from the group that they had the initial results from Cyprus Copper Tailings, where they collected 68 samples from the asset there, and these samples showed acid-soluble copper ranging from samples range from 0.41% to 0.92%, and also close to the edge of the pit from which the samples were taken, they identified gold, 1.48 grams per ton gold was identified close to the edge of the pit. So that's a very encouraging start for the Limni project. And then during the summer, the company also announced that it had commenced drilling at the Ulstrom Rare Earths project, and it drilled 13 holes at Ulstrom during the summer, completed those in September. It completed it drilled up to 1,500 meters across 13 holes ahead of schedule and also below budget, which is an important consideration in these markets. We got the results through the following month. The company identified significant rare earths mineralization, and also a shear structure was identified that lent credence to the initial prognosis that we could be looking at a district scale opportunity here. And certainly the initial results reflected consistent mineralization. Hole 1.5 meters at 3.48% total rare earth oxide. Also, a significant chunk of heavy rare earth oxides identified too. Hole 2, 7.25% at 0.72 total rare earth oxides, and similar numbers for hole 3. Then last month, November, the next phase of results came through. 2.55% and 1.6% total rare earth oxides, nearly 14% heavy rare earth oxides. And these numbers were pretty consistent across the drill area, which is indicative, and further gives credence to the supposition that EGT have got a district scale opportunity on their hands. Now, certainly, Aidan Lavelle, the chief executive, said that the results are critical to supporting EGT to monetize the project. Now, the business model the company operates is similar to the farmer business models, where they employ a capital light model. They identify quality assets and then develop them, and then bring in the big money or the bigger companies to fully fund and fully finance the next phase of development. And indeed, that's the plan here with Ulstrom. They're going to speak with various partners to bring those partners in. And indeed, both Jack Kelly and Aidan Lavelle were at Resourcing tomorrow, and had a number of meetings lined up to talk with potential partners. So, at a very exciting stage of development. Currently, since the IPO, the share price has drifted down slightly, but not perhaps as far as you might think, in these markets compared with others. The shares are currently trading at 8.5p, giving the company a market capitalization of 12.3 million. And I think certainly with Carl Frill's backing and the progress the company seemed to be making at the show, I think there's plenty more upside on offer from European green transition in the months to come.
Good. Well, thank you very much, Alan. Yes, that's nice to hear a bit of an update from them, because they were pretty new on the market, aren't they?
Yeah, came to market early this year, and certainly hit the ground running. They've had a pretty impressive year, and I think certainly the share price performance compared to other companies in the sector has been better, although the share price has drifted down. They haven't lost the ground that you might have expected, and I think that's largely to do with the fact that Carl Frill's got his shareholding in the business, and of course is very astute, and has a clear plan to monetize the assets, and I think that's been the difference here with EGT, and that's why I think it continues to offer a substantial upside for people or investors considering the coming to the company at this level.
Good. Well, as I said at the start, it'd be nice to see some more local mining opportunity investments, i.e., in the UK or indeed in Europe. And European green transition, of course, positioned in that space, as are, for example, Metals One, of course, in Finland and Norway there. So
indeed,
hopefully we can see some more of those homegrown projects coming out. But Alan, thank you very much for your time. As always, pleasure to see you last week. Thank you for your help on the interviews. And do have a good weekend. And we'll speak again next week, and then we're not far from Christmas, are we?
Not far from Christmas, and still time for a Santa rally. You never know.
Indeed. Thanks, Helen. Well, Dan Flynn is back joining us for another session on the Research Talks. We're going to be talking about Capital Metals, of course. Capital Metals were at the Resourcing Tomorrow show, and Pam interviewed them for Stockbox, but it's the first time that we've really had any kind of talk about Capital Metals. Dan is going to bring us up to speed on his take on Capital Metals. But before we get started on that, it was great to meet you in person, Dan, last week. Thank you for your help on the Cornish Pavilion. It was a pretty busy and chaotic day, I think, and of course the priority is for people who are there, the companies there, to have their meetings. That's what they're there for, and we always come secondary to that. But I think it went quite well. What was your vibe?
Yeah, well, thanks again for having me along, Mark. I had a great day. It was great to meet you and the team. And yeah, you say chaotic, but I think it was really a good chaotic, wasn't it? Their vibe was really good. There were a lot of attendees. The companies all seems to be a bit more bullish than they had been perhaps in previous years, and maybe it's a signifier that the sector in a whole is approaching a corner and might get back into some more positive territory.
Yeah, I hope so. I mean, I said the vibe. I got the sense that last year it was like it was there was money there, but it was really holding back. The sense I got this year was there's still money there, and it's perhaps less holding back than it was last year. So that was slightly more positive, and there was lots of Saudis there as well. So I think there was some real high end discussions being had. Talking, off record to some of the companies that were there, they'd said they'd had some really high-level meetings with big funds and serious investors. So there's obviously conversations still going on. We'll have to obviously wait and see if that money does indeed get released. But it did seem like it was more green shoots coming along. And I think some of the people that were there as well, and the conversations that were happening, with London, can London reinvigorate itself as a mining finance hub, and how can the UK secure its critical supply chains? There were people there. I spoke to Baroness Norther, I spoke to Tom Attenborough of London Stock Exchange. Critical Minerals Association were there as well. And I spoke to a lady from Nuclear Europe, really, about what they're doing in that space, trying to be the conduit, they said, between the public and the government when it comes to renuclearizing Europe effectively for green and baseload energy transition. So I did feel there was a lot of really good people there this year from quite high up, and I really did get the sense that it's actually seriously being talked about now, whereas before it was like we should be talking about these things. It now seems like we are talking about it. So hopefully that bodes well.
I agree. I mean, it's like a lot of these metals are tied into the green transition, aren't they? And like you say, it's something we've been aware of for a long time, as the whole world over, really. But it's not something we can deny forever. And I think if the UK and Europe can position itself at the forefront of the supply chain for that, then it really stands to benefit the companies involved and their investors as well.
Indeed. Well, let's talk about Capital Metals then, Dan. So you've obviously done your research. Give us a bit of the overview of what that company is all about.
Yeah, absolutely. So I wanted to talk a bit about Capital Metals today because the company released an announcement this week, which I think serves to emphasize the opportunity it could present and is perhaps maybe being missed a bit on the market at the moment. So just to recap, Capital's the 100% owner of a project called the Eastern Minerals Project, which is based in Sri Lanka.
Mm-hmm.
Eastern Minerals is what's called a mineral sand project, and it contains an initial JRC resource estimate of 17.2 million tons with an average grade of 17.6% total heavy minerals. We can come back to what that is, more about what that actually means in a moment, but just for now, that basically makes it one of the highest grade deposits of its type the world over.
Okay,
so that's good. So Capital has the initial industrial mining licenses and approvals to advance Eastern Minerals to final investment decision, which it expects to do by Q2 next year. And from there, things should start moving pretty quickly. It's plans to start construction pretty soon after, with an expected period of construction of 9 to 12 months. After that will be first production. So everything there is a pretty short construction and time frame due to the simplicity of the project, which isn't something you can say about a lot of explorers. And because of the project's high grades, the simple processing, and the strong infrastructure that surrounds Eastern Minerals, Capital believes it could be a very low cost, high margin operation. And this really is what brings us to this week's announcement.
Okay.
So Capital did a PEA in 2022, which gave Eastern Minerals a base case post-tax project NPV8 of $155 million and an upside case of $235 million.
Okay.
Over 10-year mine life, the base case suggests revenues of $643 million and a payback period of 3.7 years. So that's not bad going at all for a company with a current market cap of 6.9 million. But what's happened this week is Capital's announced that through process improvements, you can look at the RNS for the details on that, that have taken place since the PEA, along with its improved knowledge of the project. It can reduce stage 1 capex. So that's the capex just for its first stage of production. There's much more upside in subsequent years beyond that. It thinks it can reduce this by a third to 20.9 million.
Okay.
Obviously, still quite a significant amount, but it's less than it was. And alongside this, Capital also said it's been in talks with off-takers, vendor financiers, and potential Sri Lankan project partners to finance the project. And it re-emphasized the fact that it wants to do this in a way that minimizes or totally eliminates the requirement for raising in the market, and in a way that's also quicker than taking on debt. So the company's summary was that this will fast track production, significantly reduce the capex, and enable Eastern Minerals to become self-funding as quickly as practicable. And I mean, these are all things you want to hear from a stock about its flagship project, really, aren't they, Mark?
No, definitely. So that's quite well advanced then with the PEA there. So what they got sort of coming up down the track then? Are they going to continue going down that study route, do you think?
Yeah, so alongside that reduction in capex, Capital also announced this in its RNS this week that now the parliamentary elections have concluded in Sri Lanka, the company's going to restart drilling at Eastern Minerals. So it's mobilized a rig and team to the project. And it seems to me that this is perhaps equally as important as getting the funding over the line, perhaps. So through drilling, the program it's launching now, Capital plans to at least double the project's JORC resource estimate by going to untested depths. And it also wants to confirm its resource and reserve for final mine design and production scheduling. So these are, if it can achieve these goals, it seems to me like it really would be a big win, because it could improve Eastern Minerals project economics significantly. And the company's trying to get funding for this project. If it can demonstrate that the upside's much bigger than it already is, and it's already pretty impressive, then it's only going to help with funding talks and reigniting perhaps some retail interest in the stock.
And it's just the one project they've got. It's just the Eastern Minerals project.
That's its flagship project, yeah.
Okay.
Yeah.
Okay, and we're talking here. This is heavy minerals, isn't it? So
that's right.
So that is what are they? It's not rare earths, is it?
No, it's a good question. When I first looked at the company, I was wondering the same thing. So basically, the mineral sands at Eastern Minerals, they contain a range of critical elements. This is what it's referring to with that tag. And all of these are in short supply due to rapidly growing demand and limited reserves. So if I just run through this quickly, they include titanium minerals like ilmenite and rutile, which are used as feedstock for titanium dioxide pigment and in products like paints and inks.
Okay.
So that doesn't sound on the face of it as exciting as the likes of copper and lithium with EVs and the green transition. But nevertheless, the titanium minerals market is forecast to grow at a CAGR of 5.6% between 21 and 28. And by 28, it's supposed to be worth 27.2 billion. So, having one of the biggest deposits of these minerals in the world, you can see how that would be valuable. And the sands also contain some other very obscure minerals. The first time I've heard of them. There's zircon, which is used in ceramics, and garnet as well, which I think is a bit more well known, which is used in abrasives. And these are two more rapidly growing markets. Zircon's expected to be worth 3.4 billion by 28. Garnet to 6 to 7.5 million by the same year. Again, all lesser known minerals perhaps, but also there is a market for all of them, and Capital through Eastern Minerals has the deposit that's going to supply the companies that need these products for their own need these metals, sorry, for their own products.
Yeah, so it's the heaviest heavy mineral sands, isn't it? Which are literally they are sand. They are heavy sands, aren't they? They can contain lots of different oils, but they're really like dense sands. And I think each deposit can almost contain different ones. I know some contain diamonds, some containing oils. So yeah, it's a slightly unusual. But not, I don't know if it's unusual, but it's different from hard rock, isn't it, or clays, or even brines, for example. Different deposits. This is literally sands that are that are saturated with different minerals and commodities there. Okay, so go on.
I was going to say I think you're right, and I think perhaps the fact that it's sands rather than hard rock is kind of key to this because it means processing's a lot easier, and that obviously improves the margin of the projects and reduces the capex, doesn't it?
Yeah, indeed. So just looking at just to finish off here, some of the metrics here. What are we talking about in terms of their current market cap, for example, their current valuation?
Yeah, so Capital Metals has had a tricky couple of years.
Okay.
First, it was hit by the illegal suspension of mining licenses in Sri Lanka. That's been resolved now.
Okay.
Then it was hit earlier this year by the news that Sheffield, its strategic investor, would no longer support the development of Eastern Minerals, presumably through to production due to its own financial issues. Side note, it's worth noting that Sheffield remains a strategic investor. It owns a 10% stake that it bought for 1.25 million earlier this year, and the CEO continues to sit on the company's board. So it's there in the background. It's just not right now able to contribute as much as it perhaps had thought it would be able to begin with.
Okay.
So the share price, these two factors, the share price has never quite it's sort of languished ever since, particularly that issue with Sheffield. But I think that there are two things that could get this moving. First, obviously, there's the possibility of securing the funding needed to take Eastern Minerals towards production. And the reduction in capex requirement announced this week will presumably make this more achievable. Companies said those talks are underway, and if we see some resolution, that could add some confidence in Capital's ability to deliver on its plans and start, some way down the line, generating some cash flow from production, and not that far down the line. As we said, it could be in a couple of years. And then I think the other thing that might get this moving is the results from that drilling. If that can improve the JRC resource estimate and in turn the PEA and the project fundamentals, then that's just another tick in the box that for both retail investors maybe and potential project partners. So in the meantime, I'd say that Capital's balance sheet looks all right from what it said out there. It had 3.1 million in cash and cash equivalents at the end of March, which is said is covering all its planned work. Obviously, if things get delayed, that's subject to change. It has that strong support from strategic investor Sheffield. So I think with this one, it's just so low. Its current market cap at 6.9 million it's very low compared to what it has been historically. And you've got a project that really, with a couple of a couple of fortunate events in the company's favor, could really get it back on track in terms of its core goal of reaching production. And I think that stands to have to promote some buying and get this valuation back up if we see some decent news flow in the coming months.
Good. Excellent. Well, thank you, Dan, very much for giving us your take there on Capital Metals. So it's one to keep an eye on. As I say, we've not covered them at all, really. We interviewed them for the first time at the show just this week, and you've given us your little summary of it there, so that's fantastic. Thank you very much, and hopefully we can be keeping an eye on that story and seeing how things develop. But thank you, Dan, and do enjoy your pleasant weekend, and we'll speak again later on.
Perfect. Thanks, Mark. Have a nice weekend too.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.